Yeah, I mean, there's still $1.5 trillion in excess savings. There was $2.7 trillion in excess savings about a year ago from just government's fire hosing money directly into bank accounts. It's still $1.5 trillion. And so that's still a lot of excess spending power. And as you say, some of that is definitely finding its way into speculation. And do you think that it's, some of this at least is just a conditioning of the buy the dip mentality that retail has, was pounded into them through experience over the last kind of decade? It's just going to take a while for that knee-jerk reaction behavior to play itself out?
Yeah, I think people, if you say to your average person, I don't know if it's a knee-jerk reaction as much, I mean, you could call it that, but if you say to your average person, how do you invest? The word invest means you buy assets to people. That's just this passive, thing that everybody's been taught. And that's what investing is. You buy assets. That wasn't the case prior to
equities, right?
Equities, primarily, yeah. They're living bonds too now, but yes, I agree. This idea of active management or relative value, is much more nuanced, and what broadly worked from 68 to 82 when the market went nowhere, for example, prior to this period when we were in a demand push economy, which again, this is now the bigger broad picture conversation that you referenced before, but that type of a market, which can be a very strong economy, passive investment doesn't work. Just putting your money, set it and forget it, dollar cost averaging right by the dip, that stuff does not work, and that broadly is confusing to people who've grown up in the last 40 years. It's not just this last 10, 20 years. It's just what investing has become and what people believe it to be.
Mm-hmm. Well, don't you think there's also we have to remember the last 10 years has been sort of accentuated by a zero savings rate. And I think that has set up this habit where they are, I think generally investors who, let's call them the retail side, have been conditioned to buy the dip constantly because there's no other option. At least I don't think they're perceiving. I don't think there's a broad adoption of, hey, you can get 4+% in risk-free assets. I don't quite think that has penetrated the general zeitgeist of the average investor. I don't think they're pausing at the moment and saying, actually, you can compound your money at sort of 4% a year. I think they're still in the hypnotized state. Yeah, the sort of the TINA, the BFT, the BTFD, bottom hunting. It's worked. All the recessions have been short. The corrections have been even 08, 09, although severe, was a V bottom. We haven't had the fulsome experience of a real bear market with the 70s. Again, I look at the 70s and say, well, yeah, look, you dollar average goes up and down, but you have to factor in the inflation and the real returns that were going on
negative
at that time as well.
67% over 14 years. Yeah,
correct. And that's where people, I don't think, understand. And the 30s experience was the opposite. There was deflation that offset asset price decline. So when you look at the real rates of decline in the 30s versus the 70s, they're almost about the same. Mm-hmm. And, so I think investors are still sort of, they've been conditioned, and the conditioning will take some time. It took a lot of time to get this conditioning embedded in the markets. And I think it'll take some time to get it unconditioned to be rewarded for that overnight. Go ahead.
Yeah, no, I think that's absolutely right. I think add to that, your average millennial on down, millennials are at about 40% of where the baby boomers were in terms of wealth and household formation. They have a ton of catch up to do in their minds. They're trying to buy homes that are out of reach. They are falling behind. This is what's driven this all of the fiscal stimulus we've had. It's what's driven the ideas of crypto and fairness and equity and equality that we all talk about. It's all a function of a working class, a labor class, which was the millennials on down, not having assets, not benefiting from this massive rally we've seen for 40 years, and then not seeing wage growth throughout that process either. So speculation is almost necessary for this cohort, right? And they see it as a means for catching up. That's why crypto, in my mind, exists. We've talked about this, I think, in passing, but crypto is a confluence of three things. This idea of, hey, the system's not fair, right? So we're going to create something that's more fair. It's a idea that technology can solve all of our problems, because guess what? For 40 years, we've thrown money hand over fist into growth, and that's created a technological revolution. And this generation has grown up with that. And then lastly, it's a desire to buy more convex assets and be speculative because they have to in order to get convex kind of returns. And that's what YOLOing calls is about. That's what crypto is about. That's what a lot of this kind of continuing to buy the dip is about. And I think all those things are related. So I
yeah, there was for the boomers and for the early Xers anyway, I think there was a general perception that you could afford the American dream, or the typical kind of middle class lifestyle, by saving labor income. That was sufficient for a down payment on a home, to fund a family, to send your kids to school. And I think the millennials, quite rightly, unless something very material shifts over the next 5 or 10 years, are perceiving that you probably can't afford a middle class lifestyle and to start a family in many sort of desirable urban centers on labor income alone, right? You need some kind of speculative win in order to subsidize that, to get you to a lifestyle that, maybe growing up, your parents and you kind of took for granted, that every new generation sort of got that automatically. And so I think you're right. I think that's driving a lot of this behavior, is just kind of a general kind of fear or terror. Like, when do I get my shot, right? When do I get to start my family? And when do I get my shot at the dream that my parents lived, right?
Which probably to some extent explains the move towards populism on both sides of the aisle, right? Both
Correct.
Democrats and Republicans have moved towards fiscal expansionary policies with a different veneer, whether you're on the left or on the right. But essentially what they're saying is, to the largest cohort of voters that are coming up, which is the millennials, as the boomers retire and start to pass away, they now have to cater to these people that can't afford assets, and primarily homes, right? Which is the quintessential aspect of the American dream.
100%.